Good morning, good afternoon, and good evening to everyone out there. Thanks for joining us for Fiducient's speaker series. My name is Anthony Novara. I'm a partner and research director at the firm, and I largely wear two hats. I lead our marketable alternatives due diligence team, as well as our capital markets asset allocation effort. And I'm really excited to be joined by our guest today. So Seth Fischer is the founder and chief investment officer of Oasis Management, a $6.5 billion global investment manager headquartered in Hong Kong. Established in 2002, Oasis invests globally across capital structures with a focus on Asia. Before founding Oasis, Mr. Fischer began his career in 1995 at Highbridge Capital Management, where he managed the firm's Asian investment portfolio. Prior to joining Highbridge, he served in the Israel Defense Forces as well. Seth is a proponent of corporate governance reform across Asia. He's a frequent speaker on economic and investment panels. The firm is a signatory to stewardship codes in Japan, Korea, and Hong Kong, and a sustaining donor to the board Director Training Institute of Japan, as well as a member of the Japan Corporate Governance Network, the Asia Corporate Governance Association, the Japan Stewardship Initiative, and Hong Kong and Japan chapters of the 30% Club. So welcome, Seth. Thanks for joining us for today's speaker session.
Anthony, thanks for having me.
All right, so let's our focus today is on Japan. So just for everyone out there, the format is we should be together about 30 minutes. We'll leave some time at the end for Q&A, as well as we'll be monitoring the chat feature. So if anyone has any specific questions, feel free to put them in the chat. But in the meantime, let's get going. So in discussing Japan, it's interesting. We're looking at 35 years between peaks. So the last time that the Nikkei 225 hit its high was December 29th, 1989. Since I equate most things to music, I looked up the #1 song in the US on that date, and it was Another Day in Paradise by the one and only Phil Collins. So I guess, Seth, to start things off, why did it take so long for the Nikkei to retrace back to its high?
In 1989, Japan had accumulated an enormous amount of debt, and famously had gone to extreme ecstasies. Right? The palace in Tokyo was worth more than the entire state of California, and so Japan had to kind of come off this borrow and real estate bubble, inflated bubble, incredible bubble. And valuation driven incredible bubble, and then spent the next 3 decades paying back that money, and then kind of actually to be more accurate, they spent 15 years paying back the money, and another 15 years accumulating far too much cash. Right, so they kind of had an excess of mojo in the 80s, and then and not enough mojo ever since. And the government kind of went ahead and back in 2013 try to reinvigorate that mojo. Right, try to give them some mojo back, and that's what finally brought the Nikkei back to its highs again. Right, now, remember, over that same period of time, actually the S&P is up something like 32 times, right, since 1999.
Yeah, that's quite a bit too. And so Japanese equities continue to be in the news. I'd be curious, one of the other terms that's been in the news, Seth, is the term yield curve control. Can you describe what it means in Japan and its implication for asset prices, especially the exchange rate for the yen, which has weakened considerably recently?
Sure, you remember well. Everybody went to zero back in 2008, right? As a result of our own real estate crisis and kind of the global financial crisis, as they call it in Japan. In the U.S., you call it the Lehman shock. But kind of the subprime crisis, as we call it as well, and so everybody in the world went to zero rates, and Japan has been effectively at zero rates for for 2.5 decades, and that's been an attempt to try to stimulate the economy, and so that attempt of actually keeping rates negative, literally negative rates, trying to stimulate, kind of push down money to companies to try to get them to actually turn around and actually start borrowing again. and starting to give them some mojo. Now that's like that hasn't really helped. It's all that's helped is actually shareholders and kind of engage with management turning around and say, okay, fine, we'll give you back, we'll kind of buy back our shares or spend some of the money because you're earning negative on it. But that yield curve control, if you wanted to create a bubble, I mean, if you wanted to create some sort of stimulation, that's what you would do, right? Now it's created, it's had adverse effects in the U.S. where we've now had to get tame inflation, right? Japan's at the other end of that extreme. The funny part is, I'm not sure it's so funny, but the funny part is Japan is trying to, we've had a bit of an inferno of inflation or too much inflation. They're trying to like breathe a little wind into like these embers and trying to stimulate a little bit of inflation, thinking that it'd actually be finally good, right? So people have not gotten a price rise or wage rise in 30 years in Japan. It's just beginning to start. Prices have not changed literally literally in 30 years. It's just beginning to start. And so they're just starting to kind of come off of negative and start to go to zero. And then the presumptions are going to start going to 25 and 50 basis points. But because the US has been at 5.5% rates now for a little while, and and the debate in the US keeps on going on, like when we're going to cut, and they keep on pushing out the cuts further and further out, the yen continues to get weaker. And the yen's at bridging on touching 160 right now. That makes Japanese exporters far more competitive. It also makes kind of nearshoring, which is kind of coming off of offshore from China and bringing that production into Japan much more competitive as well.
Got it. That makes sense. And so as part of that, it'd be helpful to just discuss a little bit as far as government initiatives that the Japanese government is doing, not just the central bank, but things like, any changes to taxation. I know I've read in the news a couple times about, companies valued below their book value having to delist. In other markets, I think Korea, that is the case. And then, share thoughts on, share buybacks, which are obviously very popular here in the U.S. Just anything noteworthy in terms of what the government is trying to do, really get that mojo back, certainly like you mentioned, and stimulate growth. But anything noteworthy, at least recently or in the the last few years that can make that more successful.
Sure. I just want to juxtapose a little bit kind of where the US is at and where Japan is at. They're kind of like the other sides of the spectrum, right? So the US is kind of maybe arguably got an excess of buybacks where management's comp has been excessive, right? And management comp has been extraordinary shareholder, they're aligned with shareholders. They have an enormous amount of stock options and stock comp, and they're based upon total share price performance, right? And in Japan, they virtually own no stock, nor they even seem to perceive as greed as like a factor in their, or in their interests. And they're not even like focused, they think that board members having stock disaligns incentives, right? And as opposed to the US, we would say that it all aligns incentives. So they've been exactly opposite sides of the spectrum. That being said, finally, after years of both government initiatives since 2013, since the beginning of Abenomics, of pushing the corporate governance code, pushing management to engage with shareholders and shareholders to engage with management. And yes, finally shareholders and ISS and Glass Lewis and all the shareholder proxy forms, as well as the TSC and as well as METI, the kind of government agencies, turning around and saying, hey, you know what? If you have too much cross shareholdings or if your ROE is too low, right, we're going to recommend people to vote against you. And so all of a sudden, management who had like 2, 3, 4% ROEs, in other words, ROEs far below their WACC, right, sure, their weighted average cost of capital. So instead, the easiest fix has been to go ahead and just do buybacks. And so finally, meaning like 2020, 2021, we finally had, the beginning of share buybacks. That's increased every year. Right? And that's how the effect of bringing up ROEs is almost doubled ROEs across the board in the market, over the last 4 years. So that's had a real impact. They're buying back shares, increasing dividends. And it's quite amazing. You can find like 5-6% dividend yields in Japan in a place of interest rates is still at 0%. And so
that's unbelievable.
So there's other tailwinds that are also super fun. In the same environment, people have not had mojo or for lack of a better term. There's also been a lot of pent up. There's been no M&A. So while the U.S. has benefited from an M&A boom almost since the late 70s, but since the 80s, where there's an enormous amount of consolidation across sectors, and that M&A kind of cuts out costs, because certainly headquarter costs, but but the kind of parent company costs, goes ahead and delivers cheaper prices to customers, right? And you can see it in your local. For that matter, you can see it in local drugstores, right? You get everywhere you're going to go, you're going to see a Dwayne Reed or Walgreens or CVS. And that's about it, right? And if you looked in America back in the 60s and 70s, it was like your corner local pharmacist owned it, right? And now it's like big change. It's actually delivering, depends on what city you live in, but is delivering, better supply, lower prices, wider selection, right?
All good things.
Right, all good things, outside of the crime sprees in some of the drugstores in America at the moment. Let's ignore that for right. But Japan has not gone through that, but they've not gone through that in any sector, and so I think there's also pent up kind of eminent. The government both in 2019 and in 2023 initiated new takeover codes, right? And so historically in Japan, if you want to take over a company, you got to take over a bid, and the management didn't want to be taken over, they could just say, "Oh, we don't like that bid because we don't like what they're going to do with the company." Right? And finally, the government in 2023 said, "Well, one second, you as a board can't just do that unilaterally, right? You have to decide if it's a higher quantitative number, right? I.e., if it's a higher bid price, then you have to evaluate. Then you have to bring it to shareholders. You have to evaluate it." And so that's a sea change. I think there's going to be a ton of M&A in the next 5 years that'll actually, be beneficial for everybody, but and certainly has lots of opportunities for us as shareholders.
Got it. That makes sense, and that is certainly in line with more news flow associated with focus on Japan, discussion of Japanese equities. We'll certainly get to some your thoughts on some other assets as well. But I'd just be curious, just given that there's a lot of geopolitical discussion in the world with plenty of articles written about globalization and trade. Japan is the third largest economy in the world, and I'd be curious your thoughts on where does Japan fit in with other economies? Where is it the most tied? What other economies are the most tied, have the tied fortunes to Japan, and hopefully its rise from here, given we're sort of bifurcating in terms of global politics and the like.
Well, Japan is a massive beneficiary from what you would call nearshoring, i.e., offshoring from China.
Mm-hmm.
And so Japan continues to be a key partner to the U.S., both from a military point of view, in terms of technology and as well as full-blown technology point of view. And so it's actually a massive beneficiary of the nearshore, kind of the nearshoring. There's an enormous amount of kind of other government, AI related as well as military related applications in terms of what roles Japan and Japanese corporates are going to play in kind of the greater U.S. framework. Japan trades with everybody, and it's cheaper than ever for people to trade with Japan, because Japan, the yen is just so weak, and so it makes Japan an ever more competitive exporter across the region. So that's a benefit for both the autos, both enormous amount of the parts companies, and so your camera and your iPhone, right, is still made in Japan. And so the best and highest grade technology made in Japan. Japan is competing with Korea on that. And so Japan is still technology yet on the highest cutting technology. But your TV at home is probably made in Korea these days, if not in China, no longer made in Japan. Right. So kind of the lower grade consumer goods products are now not made in Japan anymore, but the higher grade stuff is still made in Japan. The funny part is some of those still some Japanese brands, but they're not made in Japan. Right. So your Casio watch is 50-50, it's made in Japan or it's made somewhere else, but it's still a Japanese company.
So back in 1989, VCRs and boomboxes in 1989 were made in Japan, but no one's using either of those anymore, so it's irrelevant. But those would probably be made, if they are still being made in Korea or China or somewhere else.
Right. You had what were they called? You had a Sony, you had a Sony Walkman, right? You had a JVC, VCR at home, right? You had a Uniden phone, all Japanese companies.
Yep. Yep.
right? So so Uniden is like basically doesn't exist anymore. JVC is now called Panasonic. It continues to like exist, and it's beginning to go through some changes. But companies that have changed super well and successfully well is companies like Hitachi, another company that you know well, right? But as like transformed to, basically a service provider in the corporate in the AI space and tech spaces,
Oh, interesting. Okay.
as well as still making some very very key hardware.
Got it. So certainly Japan, whether it got credit as it was going through the two 15-year periods that you mentioned, has always been part of the global supply chain and might actually have even more benefit or more levered upside to a variety of things in the future. That's certainly good to know, even though it's what wasn't in the headlines and now it's more in the headlines these days.
Yep. Yep, it wasn't in the headlines. It's kind of done this very quietly, and I think actually that's great. Much better to be quiet and make money doing it than have a big spat. It's beneficiary from basically the U.S.-China spats.
Got it. Okay. So Seth, to some, Japan has been a fairly opaque market, and sometimes investors have experienced difficulty understanding the corporate governance structure in Japan. Can you give us just a little history of what it used to be like and how much it's changed, perhaps in the last several years, as you've alluded to?
Sure. So it's all been extraordinarily dramatic. Pre-2013, that's like only 11 years ago. Like all boards were 100% internal. Right. So like the whole phenomenon that you're familiar with in the West of like what boards do as a representative of shareholders' interests just didn't exist. And it was basically management and management alone, and they were answerable to the chairman, who was often the same person's CEO, or had just been the most previous CEO. There was not external chairmen; it was all internal. And then with the corporate governance reform, they also needed to have two independent directors. Those two independent directors were often like your lawyer and accountant. They were just used to saying yes to you or checking the legality of what you're doing or the right accountant, but not the wisdom. Right. And now then we went to like 2.0. I call that directors 1.0. 2.0 was like, a professor who was like studying historical incidents. And now 3.0 was like having real industry professionals. Right. So now, as we talk about, now that we have the form, you need to have the substance. We had a meeting actually much earlier today in Japan with the TSC again about like, now that we have the form, we need the substance. Right. We need the substance of actually these independent directors who know the industry, not just taking boards' words for it, but actually independently having visions and views and having functioning nomination and compensation committees, making sure that we have the best in management appointed. Right. So like Japan went from this internal board system, a seniority-based system, owning no shares virtually, right? So like a world where there's much more shareholder-based comp. Hitachi went ahead and implemented, you know what? We're going to compensate you by how you perform against your global peers. That's all brand new. So this whole corporate governance reform is kind of extraordinary in terms of like the board structures changed, a third of the board, if not a half the board being independent directors. Both diversity on boards used to all look like 70-year-old men, 70, 90-year-old men, right? So there's an increasing amount of diversity on boards, both international diversity, women on boards, both a whole lot of more diversity on boards, as well as incentive-based comp, finally for the board and for senior management, and kind of the way they're valued as well in terms of functioning nomination and compensation committees to go ahead and search for the best in management.
And so that's obviously got to be a good thing. This sea change has got to be a good thing for shareholders and creditors. What about other stakeholders in general? I presume if wages have been stagnant on a real basis for 30 years and they're starting to go up, that's a good thing for the workforce in Japan. I guess as you think about how all these things affect asset prices, they generally would be, if their growth and stimulative would be good for equities, but I would presume there's other opportunities in other asset classes as well. Is that true?
It's true across the board. It's true that, look, if companies are going to make more money, if you're not going to sit on 40% net cash, and if you're actually going to find and be able to raise pricing, and if you're going to finally go ahead and think about, how do we make more money? Right? Then that making more money is good for all stakeholders. It's good for the employees. All of a sudden, you can afford to go ahead and give people a raise. Right? And if you're going to start having, you know, going to start evaluating whether businesses are actually profitable, you might have some more job fluidity. And if management is scared against being voted against by shareholders, which they are suddenly, like basically, or being reprimanded by their own board, then they're actually going to work harder as well and work harder to produce better returns for all stakeholders. So you see it across the board. That means that actually people are starting to get raises. That means there's more consumer spending. If you go ahead and actually you have more innovation. And so, you know, I don't know how the last time you bought ASICS sneakers. I mean, it just happens to be on top of mind for me at the moment, right? But you know, ASICS was kind of like declining as a brand, and it's kind of has a massive resurgence. Revenues have doubled in the last 4 years. Margins are up more than 50%, and so stock's up more than 100% this year. But that's all like a massive sea change. And that's sea change from a company that was like basically declining. It's at reduced sponsorship of marathons and, you know, of re-engaged across the board. And yes, they've even caught on to like making these run-walk series of being, you know, of comfortable dress shoes. And so like, you know, they've kind of they've reinvested in actually kind of some innovation, which had been lacking in Japan ever since, you know, Japan led in the Walkman, but then this little company called Apple took over. And you know, you probably haven't bought a Japanese based you know, you know, music player or phone in a long time.
Yeah, the good old days of making a mixtape are long behind us.
Right. Right. You can make a mixtape on Spotify. We could say that for next conversation.
I think they call that making a playlist now, different from a mixtape, but same concept.
Yes.
So Seth, we actually had a question come in during registration. So how would you characterize Japan's next business cycle? I realize that's a leading question. And how does the China-Taiwan dynamic factor into any of that?
You know, we have like Japan as a economy has lots of, you know, different opportunity sets, right? And so there's as I said, you know, domestically M&A has a lot of margin to unleash and unlock, right? The onshoring away from China has a lot of opportunity sets. The risk of China for the Japanese businesses that are engaged in China exists the same way it exists for Walmart and all other U.S. companies that make some substantial amount of products in you know, in China and or clearly in Taiwan if there's a conflict. Taiwan is extraordinarily close to Japan, and you know, Japan has a much more of a risk even than the U.S. kind of being dragged into any sort of conflict. But you know, it's not quite there yet. The that M&A that I think is about to happen is not fully happened yet. We're at the verge of beginning to see some domestic hostile M&A, but there's not been any foreign hostile M&A yet. But because the yen's so weak, you could see there's enormous amount of foreign interest. We get incomings a couple of times a week from foreign corporates, European and U.S. based corporates who like know that we're, you know, significant engaged investors in Japan who are interested in buying Japanese corporates because it's just so much cheaper than ever before, and they have U.S. assets. So in many ways, while the Nikkei is up, actually pricing of these companies actually gotten cheaper because their overseas assets are you know, so much more valuable in yen terms, right? Because they gotten cheaper because the yen's gotten cheaper, and so we see enormous amount of kind of other Japanese corporates, company like Kao that we're publicly engaged in. You can see our campaign at bettercow.com, KAO, right? Which owns brands like Motenbaum, Orbe, Free Plus, Curel, all these different brands. It could be a global leader like L'Oreal and Estee Lauder. They haven't even engaged significantly in digital marketing yet.
Wow.
They've like virtually not engaged in the online, you know, in the online economy yet. E-commerce is still like nascent stages in Japan, right? So there's a lot more they could do. And like we've seen what that's happened, you know, the power that's given to corporates, both from a margin point of view, in terms of reaching customers' point of view, consumers' point of view, you know, in the US and Europe. And like, you know, these Japanese corporates have not yet unleashed that power for themselves.
Got it. Well, you actually led into my last question for you before we open it up to questions from the audience. So your firm pursues engagement investments in Japanese companies, and I know you continue to believe the Japanese corporate environment is conducive for more of these and focus on value creation for shareholders. We've certainly touched on some of that so far with the M&A cycle and some of the changes in governance. Maybe can you give an example or two of what types of investments your firm seeks and why overall market prices don't always reflect the fair value in your view?
Sure, of course. Yeah, we spend a lot of our time focusing on companies we think are cheap to their potential, right? Ideally cheap to themselves, but cheap to their potential, and we think we can help them realize that potential. We did that last year in a company called Fujitec, elevator manufacturing, you might know. Right? And so they were like extraordinarily fixated on new installs. And yet the business and innovation that had happened already 30 years ago in the US and Europe was actually, the business is not about installs. The reality of life is you want to get as many installs done as possible, almost at zero. You're happy to do them at zero margins just to go ahead and get the maintenance contracts. Because your elevator is going to sit in your building for 50, 60, 70 years. And if you can maintain that elevator for 50, 60, 70 years, that's a 50%, 70% margin business. And so Fujitec hadn't thought about it that way, and they were fixated on trying to protect their 5 to 7% install margins, and still missing out on maintenance. And everybody else is going ahead and encroaching on their maintenance contracts. So you go ahead and speak to the directors, and you're like, "Oh, what's your loss ratio? In other words, how many of your elevators that you installed have you lost that you're not maintaining anymore?" And they didn't even know. And you're like, "What do you mean you don't know? That's like, that should be the single most important matrix that you want to focus on." Right? And so. And anyway, so that was a result of the grandson running the company, right? And the grandson of the founder. And so there's still an enormous amount of nepotism in Japan. And so we've also cleaned that out in many other places in the world, but that still exists, existed in a big way in Japan. And so now we help install a fully independent board, independent of us, but made up of real experts in the elevator industry who don't have to take management's word for it, but know it on their own and for their own experience, to both hold management accountable, go ahead and improve your maintenance contracts a lot, protect your maintenance contracts, and you get lots of ways that they can do that. So they've gone ahead and implemented those changes. We're engaged in that in the moment, as I mentioned in Cow, where we're trying to go ahead and get them engaged on the digital side. We're engaged in that in a number of drugstore companies at the moment, where we go ahead and try to help them focus on M&A in particular, or improving the business on their own. And that's about selection for customers, as well as self-branded products. Right? Is companies that are like DIC, they're sitting on like $1 billion of art, that are like you can't even find on the balance sheet. They won't tell you about. It's never nowhere on their website. The only fun part is that if actually you go to the museum, it says all over the museum, this is founded by and owned by this company. And then if you go to the back door of the museum, you see the research center for DIC.
Wow.
And so there's an enormous amount of like unused assets sitting in, that's all of a $1.7 billion market cap as $1 billion of art.
Wow.
Right?
That is such an interesting concept that you wouldn't normally assume with such a developed market, obviously with such a history.
Yeah, so there's a ton of these kind of latent assets sitting around. And so, if you happen to go, if you go to the company, right, great, you can see there's like beautiful Rothkos, right? You can see these beautiful Rothkos, right? And then, yeah, if you happen to go ahead and like buy all the postcards, which I did, you can see the companies proud to show that it's DIC. Can you see that there?
I sure
Right?
can.
Right? So they're happy to talk about it being DIC, but the company doesn't mention it anywhere. Right? But you get to see all these like, you can see that beautiful Chagall's, right? Or their, everything else. So these right? The point is, there's enormous amount of unused latent assets sitting in a lot of these companies that also could be used for better return for all stakeholders. Right? This is like, instead of just being an ego project for the two first presidents of the company that went ahead and bought this art in the late 80s.
No kidding. Well, Seth, there's no other questions in the queue at this time. So please please let me thank you for joining us in terms of this call on Japan. I think this was really illuminating because obviously there's news flow and there's things that are specific that you might not otherwise know if you weren't a direct investor in the space. So we really appreciate you sharing your perspective with us on Fiducient Speaker Series. And thanks again to the field. If there weren't any questions in the queue here. But if you didn't get your question answered and you have any other questions on Japan, feel free to reach out to us through your consultant, or feel free to reach out to me directly, and we will get your question handled. And we really appreciate everyone dialing in this morning, afternoon, or evening. And thanks again, Seth.
Sure, pleasure. Thank you, Anthony. Nice talking to you.
You as well.